Hello, traders. Welcome back to Your Nifty Guy. Remember this, luck doesn't make traders rich, preparation does. So stop gambling and start planning. Today, I'll break down what the market did and give you the exact setup for Monday so you are ready to strike. If you're serious about trading, smash that like button, share this with your trading circle, and subscribe for daily actionable plans. Let's jump right into the charts. Before we start the analysis, today again, the price action that Nifty had emphasizes the importance of preparation. And once you are prepared, how exactly does the setup work? So these levels that I usually draw on my charts are Fibonacci levels along with the daily highs and lows, as well as important supports and resistances on the chart. That might be a gap area, might be a price round number from which price might be taking a support or a resistance. So we'll start with today's video, and as usual, the video will be divided into two parts. First, we'll be discussing about what happened in the markets today versus how we played that out. What trades did we take? How did we trail the trade? Where did we keep the stop loss? We'll detail everything in detail. And in the second part, we'll be discussing about the trade plan for Monday. So markets opened flat, immediately gave us a closing below previous day's low, right? Now we were ready to do a short trade around here with a pullback. Now markets did not give us any pullback and went straight and gave us a closing below the 4-hour fib level. So I'll quickly be showing you. So this is the 4-hour fib support. So on a 4-hour chart, this is what we had drawn from this bottom till this top. This was the 0.5 to 0.618 zone. So market immediately went down and gave us a closing below the important support zone. So support is broken. Now all we needed was a pullback, and this was the pullback wherein the first trade, the you get alert. So right, this is what I'm telling you about how I think in the markets. So once the market closed the first 5 minutes candle, the market closed below previous day's low. I was ready to short the market with a pullback. I was ready with 25,100 put on my chart. But then markets had other plans, and once the market does not move according to what you are expecting it to, you do not do anything. So there should be no FOMO. There should be no rush into the trades. You should wait, right? If just like my example, my setup has a pullback before trading any breakouts or breakdowns. So I will be waiting for the pullback. So in case there was no pullback, I will wait. Now market also gave me a closing below the important support zone. Now for me, this is again a alert followed by a pullback. Now, once we get this particular pullback, we are ready. Around here, I took a very close 25,000 put, which is the strike price that I chose for this particular trade. As soon as this low was triggered in this candle, in the 10 o'clock candle, I entered into puts. Stop loss being right around here. Markets gave another pullback and then went down. Now, once this swing was created from this stop loss, I trailed my stop loss to around this level. Markets gave another pullback and went further down. This was my exit candle. The reason, again, as per the rules that I use, this candle fulfilled all the conditions on a 5 minutes time frame. Since we were in a short trade, this candle had a low which was higher than previous low, a high which was higher than previous high, as well as a closing which was above the previous high. Combine this with positive divergence on RSI. This is where I exited this particular trade and in good profits, in good decent profits. The VIX had also been rising at that point of time, and this is the trade where I got out in decent profits. Now, do I create a long entry around here solely based on the divergence because the new low was again created, whereas RSI created a new high again? A trade could have been taken, but I avoided this trade for today for the simple reason being that the market showed a lot of weakness at the start of the day, right? If you can see, we just not just broke down below previous day's low, we also broke down below the important 4-hour fib support, right? So that was the reason I did not want to participate in this particular uh, long trade. I have had a good week, and I do not want to rush out into unnecessary or low probabilistic trades just over the weekend to screw up my weekend. So this was a high probable trade. Absolutely, as per our plan, we had both the plans on our chart. We discussed that yesterday in the video, and it played out exactly the same way. A very simple, easy to manage trade. Absolutely fine. Now, post this particular down move, price started consolidating in a random. So around here, you try to see that this is a haphazard price action, right? If you look at the market structure with no clear market structure, which is a sign of a sideways price action. So in case if it's trending, it has to go in a move of uh, higher highs, higher lows, or lower highs, lower lows. But then again, this was in a clearly sideways price action zone in a triangle form. It was consolidating, and I was again ready to take a trade based on a flag and pole. So this was the flag, this is the pole. A flag need not necessarily be in a parallel channel. It can also be basically you can name the pattern anything. This is simply a fall followed by a consolidation followed by another fall. So I was ready to take this trade around here, but then again the breakdown came in around here. There was no uh, decent pullback. I did not want to take a trade on this particular candle because had it been an inside bar and around here, I would have taken this trade around here with the SL just above the inside bar. But then again, this was not a inside bar, but quite a positive candle. So that was the reason I did not take a trade around here. The pullback, which was a decent pullback, came down around here. Had it broken the low around here, again, I would have taken the trade. But then again, the low broke down at 3 p.m. I do not take any fresh trades after 2:45, especially after 2:45. So that was the reason. No trades in the second half of the day. Only the first trade, the short trade that I took around this was the only trade that I took in the day. So I hope the trade explanation or how I entered into the trade with what logic has been clearly explained. In case you guys have any doubts, you can put it down in the comments. I will try to explain it to the best of my abilities. Now comes the important part is about the plan for next week. We will not be, I'll quickly remove these two levels that we had for today's market. We don't need the 4-hour fib anymore. We don't need this low anymore. So on a weekly, I'll be hiding all the drawings. On a weekly time frame, after 6 weeks of falling down continuously, we saw a inside bar followed by a gap up opening, a major 300 odd points gap up, I believe. And then the markets were inching higher, took a resistance from the zero point 0.5 to 0.618 zone right around here, which was the weekly fib resistance. Of course, this is the weekly level. Price is bound to react around here. So the higher the time frame, the stronger the levels, right? And this move was a pretty strong, decent down move. So any pullbacks around here, whether we break up above this move and then continue the up journey, or we are taking a resistance from here and then again going down, that is something time will tell. We are not here to predict. We are here only to prepare ourselves so that we can take only the good trades, the trades which are high probable in nature, and make money for ourselves instead of getting trapped into unnecessary volatility in the markets. So now there can be two possible scenarios. And as always, we will be prepared for each of them. This is the weekly time frame. Markets have come down, markets have retraced. Now, scenario number one, we will be continuing this downward journey. We have created a new lower high. This was the high, higher high. Now we have created a new lower high, and we'll be breaking this low, and the formation will continue, right? This is scenario number one. Scenario number two, in case if we are to reverse, the markets, as you know, it will not be reversing in a single shot like this from here, right? We are not gonna come down and then immediately reverse off like this. No, that's never gonna happen in the market. So scenario number two is we have come down, we have retraced, will be coming down, but will not be breaking this particular low. Will be creating a higher low and then will go going up, right? So all these levels will be changing based on further price action. But as of now, this level holds. So try to understand the scenarios. These are the two scenarios which can play out aggressively around here. Third scenario can be, yes, okay, we are above this around here. We can also go sideways for some time and then again decide on the further course of action. On a daily time frame, if you look closely, this week has been a dud week. We have closed where we closed on Monday, right? So Monday we opened around these levels, we closed around these levels. We went up on Tuesday, Wednesday, Thursday we opened higher, came down lower, and then Friday we have actually closed back, retraced the entire move. So our level, which we had marked around the start of this week, which is on a weekly time frame, has held true. We have found a very good reaction around here. We have closed around here. Now, what we need to see is whether we are going down to fill this gap, whether we try to fill this gap midway, form a explosion pivot gap, move up again, creating a higher low on a weekly time frame. So whatever it is, we'll take each day as it is, right? So Monday is going to be one important trading day. We'll be keeping this fib level intact on our chart. This is the weekly fib level. So Monday, plan of action. Quickly draw a zone, right? So this is a base of this entire move or the trajectory of the entire move in the last week. This is around the base. Any closing pullback, we go short, right? Now we take our very dear friend fib from the high till the low. We will be marking the zero point 0.5 to 0.618 zone. This will be acting as a resistance. We'll be color coding it to red to signify resistance on the levels. If we come around these levels based on a negative price action, we can again look at a short entry. In between this particular zone, I will try to avoid trading. Above this, we can look for a long entry with a pullback. Now, this long entry and this fib level is valid till we don't create a new low. In case we create a new low, just like we did yesterday, in our analysis, we had a fib level around here, but because market created a new high, we moved the fib level up. Similarly, in case this fib level is with this high and this low into consideration, in case if markets break down and then give us a pullback and we have to use the fib levels, we will have to remodify it in the live market. So I hope the plan of action is clear. Again, one important trade that can be there, which is a rare trade, and today was a good trending day on the downside. We have closed near the day's low. We have closed near an important level as well, right? So this is the entire week's low. In case if we get a negative candle around here, so for this particular setup, this can only work at the start of the day. We have to wait for a candle which is negative in nature, which means that fresh sellers have entered the market. We need it to give us a closing below this particular level. And then once the high of this candle gets taken out, we can create a long entry. And once we are in this trade, my first target will be a very modest, this two swing high, followed by around these levels, right? So I hope the plan of action is clear and very, very simple. So have a good weekend, guys, and I'll see you guys again on Monday. So that's it for today's plan. Remember, in trading, discipline always beats excitement. Stay sharp, trade with a plan, and never gamble with your capital. If this video helped you, hit like, share it with your trading circle. subscribe to Your Nifty Guy, and let me know your views in the comments. See you in the next one. Trade safe, trade smart. Cheers.